Ever missed a mutual fund SIP payment? Does it cancel your investment or will you be fined or does it just roll over like an unpaid electricity bill? Spoiler alert, it's not that simple. Let's uncover 5 shocking consequences of missing your SIP payments and how to avoid them. Hi, welcome to holisticinvestment.in where we simplify the world of personal finance for individual investors like you. Number 1, your SIP might get terminated. Think mutual fund companies are patient? Think again. Because one missed payment, no big deal. Two missed payments, they are watching. 3 plus missed payments, boom. Your SIP gets cancelled automatically. Would you really want to go through the hassle of setting it up again just because of a missed payment? Number 2, your bank might charge you a penalty. Think only mutual fund scare? Your bank is watching too. Miss a SIP due to insufficient funds, your bank could slap you with a 200 rupees to 750 rupees penalty. Imagine paying 750 rupees for nothing. Wouldn't it be smarter to just keep a buffer in your bank account? Number 3, you miss market opportunities. What if the market dips and your SIP gets skipped? Smart investors buy more units at lower prices during market dips. But if you miss a SIP during that time and you lose the chance to scrap those cheap units, would you ever voluntarily skip a stock market sale? Number 4, it disrupts rupee cost averaging. Why does SIP investing work so well? Because of rupee cost averaging. Investing regularly helps balance out markets ups and downs. But if you skip a SIP and this strategy will get thrown off, would you skip gym workout and expect the same fitness results? Exactly. Number 5, you lose out on compounding and wealth creation. SIPs work on the power of compounding. The longer you stay invested, the more you earn. Let's say you invest 10,000 rupees per month for 20 years at 12% return. If you never miss a SIP, you accumulate 1.5 crore. Miss 5 SIPs per year? You could lose 10 to 15 lakhs. So, would you ever let a few missed payments cost you lakhs? Yes, exactly. So, how to never miss a SIP payment? So, if you want to make sure this never happens to you, here's how. Number 1, maintain a buffer balance. Keep at least a month's worth of SIP in your account. Number 2, set reminders. Mark your calendar a few days before your SIP date. Number 3, choose the right debit date. Schedule it right after your salary gets credited. Number 4, opt for step-up SIPs. Increase your SIP as your income grows. Wouldn't you rather stay invested stress-free? Now, the final thought. Keep your SIPs going for maximum wealth creation because SIP is investing isn't just about putting money in mutual funds, it's about staying consistent. Missing 1 or 2 SIPs is not a disaster, but making it a habit, that's where the damage begins. If you want expert guidance on making the most of your SIPs, click the link in our bio for a free consultation with one of our certified financial planners. Let's build wealth the smart way. And if you like this video, definitely give it a like, share and subscribe to our YouTube channel. Thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.